Hello, it's Mr. Intermarket Analysis. I'm covering the EUR-USD pair today. This is an interesting one given the fact that it's been on an astronomical rise as of late, along with the stock market. I'll just quickly cover some fundamental catalysts that are propelling this higher. Number one, obviously QE, given the fact that the US is number one, has been downgraded by Fitch and the Gong, and the fact that tapering has been delayed given the US debt ceiling concerns. Obviously we are losing, well, not we, but the US dollar is losing its reserve currency status. It's almost like I call it a toilet paper currency now, given the fact that the Chinese are trying to diversify their assets as well, obviously going into Europe, and that's primarily the reason why people are diversifying away from the US dollar and are moving their money into euros, and that's the reason why the Europeans are seeing immense strength. Also adding the fact that the European equities are breaking out to multi-year highs, given the fact that the move in Spanish IBEX, the Italian FTSE MIB, the FTSE itself, you've got the German DAX, the CAC, they've all been rallying and sustaining the moves higher, given obviously due to the fact that the Eurozone hasn't let's just say destroyed itself from that perspective. A lot of individuals are calling for the Eurozone to crash and obviously the euro to collapse, etc., etc. A lot of the short trades or a lot of negative sentiment has been alleviated, given the fact that you had LTRO and the bazooka from Draghi, etc., etc. So and also the fact that the European currency hasn't gone into the fact that it wants to do QE, or hasn't neutralized or destroyed its currency like the US dollar and the Japanese yen, and obviously not fighting the war, or should we say fighting currency war, in terms of depreciating its currency. That's primarily due to the fact that Germans obviously have always been scared about inflation, hence the reason why they don't want to adopt the euro bonds as well. So I mean, that's just a few. There's a lot of other reasons out there. Okay, now the arguments against the euro going higher are the fact that the German data as of late has been very weak. Obviously last week was an example where German growth forecasts were downgraded, the IFO expectations missed forecasts. A lot of the unemployment rates in Europe are still rising. Inflation still is pretty tepid, although it has started to rise as of late. And that's why, again, that's another reason why it's supported the euro to move higher. Now, a lot of the currencies, a lot of the countries in the eurozone are suffering from the euro going higher. So, the argument against the euro going higher, just to give you a counter argument again, is the fact that the ECB will intervene. There's a very respected analyst that I respect a lot and I adhere to, which is Kathy Leon, and obviously Ashraf Laidi as well. And they've also mentioned the fact that the 1.4 level is the key level to watch out for in terms of the euro, and talk of intervention. So they're the arguments for and against. So argument against the eurozone going higher is hurting exports primarily, with the euro at 1.38 now. It's definitely hurting exports, and that's shown in the data recently. Okay, and adding the fact that the QE trade has been overblown to a large extent, with the US dollar index now at support. I'll just bring up the US dollar index for you. Okay, and you can clearly see there on the weekly chart the US dollar index is at some horizontal support. So although it can move lower, so we should never disrespect that move, as we know. This is a key trend line. You could certainly hit 77.5, given that the FOMC is here next week. And now the alternative, there is an article over the weekend talking about how Janet Yellen is not the ultra dove that we all expect her to be. So if she comes out and sounds anything slightly hawkish, okay, then you could certainly see a massive short squeeze in the US dollar, which in turn will force the euro lower as well. Okay, so keep an eye out for that. Now let's go back to our technicals now. So start on the EUR-USD weekly chart. Okay, we've got two key trend lines resistance, and we are definitely hitting into those at present. The lower trend line we have hit already, and the upper one we haven't obviously tested, which is around the 1.4 level. You have a bullish channel at the moment. We are in the upper channel resistance. We have a diagonal trend line here, which again is around the 1.39 level resistance. Okay, we've got a bullish momentum moving crossover with the 20 MA above the 200 MA. Again, that's the bullish momentum, given the fact that we've still got higher highs and higher lows. Although our argument will be here that we have multiple trendline resistance and upper channel resistance as well on the weekly. Okay, let's switch to the daily chart, which is obviously always important. Okay, from our perspective, the daily chart of the euro is showing a doji. Okay, on the daily chart close on Friday, so potential there for a reversal. Although we are making a new high, so you can certainly, like I said, you can't discount out the fact that we could sustain this move high up to 1.39, which again is this key trend line that's going across from here. Okay, which it targets 1.39. So, but the fact that we've had some weak data out, the fact that obviously the euro is now starting to hurt exports, and the data is confirming that as well, which again adds to the argument that the ECB may well intervene, adding the fact that the euro dollar shorts are an extreme, given the fact that everybody's all the bearish scenario in terms of the dollar, and the QE trade is certainly baked into the cake. And we have FOMC next week, so we certainly see some short covering the US dollar. So again, there's a lot of scenarios that can play out, but as traders we have to be prepared for each and every single one, just like a game of chess. In order to get your opponent checkmate, there's several moves that you can make. Okay, so we need to memorize every move and stay one step ahead. Okay, so let's go to our 4-hour chart. 4-hour chart's very interesting here. We've had an upward sloping contracting wedge pattern that's broken out south. Like I said again, we're consolidating around this 1.3830 level. We've failed to sort of penetrate and move higher with any sort of conviction. You do have a bullish channel there on the verge of a breakout southwards. Okay, so definitely not a bullish signal from my perspective. This is certainly indicating exhaustion. Let's go to a 60-minute chart, the EUR-USD. This is very interesting. We have a H&S formation here. The neckline is around the 1.3770 level. The head is around the 1.3830 level, which is projecting a target around the 1.3770 level. Okay, so 37, sorry, not 13770. Let me just get this correct right now whilst we're on here. Okay, bear with me. Okay, at 1.3710 level. Okay, on the downside. So 60 pips between the head and the neckline. Therefore, minus 60 for 1.3770 gives you 1.3710. And interesting to see the 200 MA is around the 1.37 region. So certainly look for that potential target if this H&S plays out and we fail to sustain a move higher. Okay, so it should be very interesting. The fact that commodities have been hammered, given the fact that we had Thursday, Friday sell-off in Asia, the commodities have been hammered, and the currencies will more than likely attempt to play catch-up. So keep an eye out for that. Okay, 10-minute chart is very interesting here. We did potentially attempt to make an inverted head and shoulders pattern. We did obviously push above the neckline, then we've traded below the neckline, and as we all know in terms of technical analysis, a failed pattern equals an emotive move in the opposite direction. So certainly looking to see a move back down to the 1.3775 level going into next week, and obviously given the fact that we've got H&S formation of 60 minutes, again that move calls for a move lower. Okay, now let's just look at our alternative currency pairs just to gain a intermarket analysis perspective. A key one I observe is the EURJPY in order to confirm strength and weakness in the EUR-USD. Okay, it's based on obviously Mr. J. Murphy's theory of intermarket analysis and obviously Lewis Mendelssohn's work as well. Okay, so we have a double top and a bearish engulfing candle. So again, that indicates resistance in the EURJPY, adding the fact that the Asian markets were absolutely clobbered. The Nikkei was hammered 2% on Friday. Again, that doesn't bode well for the yen and the carry trade in the yen. So certainly I should see some strength in the yen as the carry trade unwinds, and obviously the EURJPY lower as well. Okay, given the fact that we got potential risk off scenario, adding the fact that we have additional EURGBP chart. This is very interesting, the fact that we've closed a gap. Okay, so there's your gap fill there around the 0.8530 level. We are retracing and holding the 61% retracement. Okay, again upward sloping contracting wedge into the 200 MA, multiple resistance levels there, and look for a move lower as well. The EURGBP can't sustain a rally higher. Why? Because the strength in the sterling, given that the UK GDP data was quite impressive, on Friday. Therefore, I expect EUR-GBP to fall because due to sterling strength. Okay, especially compared to its peers in Europe, it's certainly stronger. Obviously, and that confirmed with the UK GDP data. Okay, so if the EUR-GBP is going to move lower, therefore it will put pressure on the EUR-USD as well lower. Again, adds to the argument that the euro is going to sustain and move lower. Another pair that I tend to look at is the Euro CHF. Again, the Kaya trade, Japanese yen, and obviously CHF. We all know, obviously, are the two Kaya trades due to the low interest rates, etc. Okay, so again, this is obviously holding resistance, and it looks as if it wants to have a downward sloping wedge pattern. Looks like it wants to sustain its move. We had a doji again on Friday, therefore again look for a potential reversal southwards. So that all gives the argument, or supports the argument, that the EUR-USD will be trading lower going into next week. Okay, so certainly look out for potential comments from the ECB to talk the currency down in order to help the exports, because it's all about the Eurozone and the periphery. Okay chaps, always remember, this is a philosophy that I teach my students and I always live by myself. Risk on, risk off, wax on, wax off. Goodbye now.